good afternoon. You're watching Closing Trades on ET now, and we have been waiting back for that fresh record high on the indices, and it's not happened at all. In fact, we went as close as less than 5 points from that level of around 25,445, but we did not hit that mark. We have been just around that level for the last 1-2 hours and very, very range bound today as far as the frontline index is concerned. Bank Nifty continues to power ahead, so not a major disappointment there. In fact, the last 3 days of outperformance continues as far as the Bank Nifty is concerned. What's on the back foot is the broader markets. If you look at the mid cap and the small cap indices, they had a shade or a tinge of red as far as that is concerned, and they continue to be in the red, even though very mildly so. Today it's fairly broad based even as far as the large cap universe is concerned, so not a major big sector which is powering ahead. Yes, there is a bit of a momentum on a couple of these two-wheeler names. So Hero MotoCorp is up 3%. Bajaj Auto launched a new bike in their Triumph JV, and that stock is also fairly active, 2% higher. In fact, we did speak with the management, and we'll try and play the soundbite later on the show as well. But talking about some of the other managements that were there with us today, take a look at Century Ply. Keshav Bhajanka joined us today in the morning, and he was talking about the overall prospects and the demand coming in from real estate sector. That stock right now is gaining 10%. We should try and pull up the stock of Century Plywoods because that's the one which is reacting with 10% gain. Blue Dart is the other one, up 12%. Nuvoco Vista saw a large trade. That stock is higher by 5%. Talking about large trade, one was underway on Tata Motors earlier, so that was a bit under pressure. And the other large trade which just happened perhaps was Trent. So the volumes have spiked up on that one. So just watching out for some of these names in the trading session. Thermax, Sumitomo Chemicals, these are the other pockets, Aisha. But overall, it's the large caps today which are actually doing well, and a lot of them sitting at record high levels.
Oh yeah, a lot of them. Yesterday itself, you had an Axis, ICICI Bank make a record high. Today, you've got the entire two-wheeler pack, which is holding out very smartly. So Hero MotoCorp, Bajaj, both those stocks very strong. In fact, M&M as well is giving them due company. Not, of course, such a big bang move, but holding up 1% nonetheless. Bharti's made another dash of about almost 1.3%. It's a 1660 rupees stock now. You've got an ONGC, Shriram, Kotak, all of them looking very smart. But Anisha was just flagging off, what's really happening within the real estate sector. In fact, we caught up with some of the key industry players, from Irfan Razak of Prestige Estates to Niranjan Hiranandani from the Hiranandani Group, as well as Keshav Bhajanka of Century Ply. And here's what they had to tell us.
Make sure that we do the balance rightly and keep our pricing to the end product and which is offered to the consumer at a reasonable price. And that is what will keep the demand evergreen. In case prices run up too high, too fast, then there is a cause for concern.
There is definitely an increased aspiration model for people who buy real estate today in the marketplace as differentiated to what was happening 5 years ago. So I think that's a big difference. And more and more people move from the affordable segment to the middle segment to the rich segment, and of course the super marketplace will still be for the mid and other segments, which I think will grow much faster than any other segment in the country in terms of volumes at least. So I think the risk segment is lowered simply by seeing to it that you are attuned to the market demand and also how the development of the cities are taking place accordingly.
If you look at economies like China, like the US, the growth in the economy or the jump in the economy, which was 10% plus year-on-year GDP growth, was driven by the real estate sector. So I think that India is likely to witness that same scenario going forward. For us, the majority of our demand or a large chunk of our demand comes from new housing, and you're correct. Maybe a fraction, 25 to 30% comes from renovations. So upgrade is a trend that is continuously taking place. But I think that the increase or the growth in the segment is going to be fueled by new housing, which is seeing a tremendous uptick. So both of these are going to benefit us. There's a question of which will benefit more.
And yes, Century Ply right now up around 11%. In fact, real estate as a pack is the best performing sector today. Sobha, Prestige, Godrej Properties, these are your top gainers. Kunal is also joining us on the show right now. Kunal, tell us about some of these names from the real estate pack. If you had to make a bet, what would be the top recommendation? And if you have a view on the stock of Century Ply.
So, on the real estate pack, I think what we are seeing right now is renewed vigor into very few specific, names. I was looking at the charts for Oberoi Realty. That's a chart, that's a stock which is making a comeback, bounced off almost exactly from its 200 moving average, closer to that 1650, 1700, range. And now the stock is placed at 1800 mark. Even Macroeconomic developers, that's a chart which has made a triple bottom, for itself over the last 1.5 odd month. So the entire month of August, we saw the real estate stocks underperforming. And now in the second half of the month of September, we are seeing many of these stocks making a comeback for themselves. So I would probably believe that it's a time where real estate stocks are poised pretty well, and the market sentiment is also gearing up, in a very positive manner for these higher EBITDA or high risk sectors. So my sense is that these stocks should do well. For Century Ply, I think what we are seeing right now is a very strong price volume breakout. Today's volume is exceptionally high for the stock. It's managed to break past above a major hurdle of 825. So keeping that as a support or a trailing stop loss, traders can hold on to their long positions.
Some of the city gas distribution companies as well in focus. There's the UBS note coming in on both IGL as well as MGL. For an IGL, it's an upgrade to buy. For MGL, it's a buy once again. And they've upped their target prices as well to 700 for IGL and 2400 now for MGL. They're saying that the inorganic opportunity complements the fundamentals right now. And also volume growth drivers, infrastructure expansion, new geographies is what they're looking into. All of it is going to augur well, and thereby the upgrade on both these stocks. So those, of course, holding out well. For Ola Electric as well, there's a buy initiation by Bank of America, target price 145. For Goldman Sachs, it continues to be a buy, 160 is the target price on them. And then, of course, Tata Motors post the block deal. That also is one stock which has been focused. By the way, there's been a large block deal on Trent as well. We should bring up that stock. Has been scaling new highs in any case. And even at these elevated levels, there's been a block which has happened 1.25% higher for Trent as we speak right now. But Kunal, any trend that you're witnessing on IGL, MGL specifically, or would you say there's lots of other opportunities in the market?
Yeah, the concern with IGL, MGL, Aisha, is that even last month or so, I think there was an upgrade of sorts for these stocks. These stocks moved up for a couple of days, but then when they land back to their major resistance point, that's where these stocks, the momentum fizzles out very quickly. In fact, today also, for example, IGL made a high which is closer to 562. And right now the stock is corrected by a couple of percentage points, coming back to that 550 mark. Even in the last 1 month back, in the month of August, the stock had a similar resistance, closer to 560, 565 resistance, which means that both these stocks, MGL, IGL, even Gujarat Gas, I think to a larger extent, I think all three stocks have been moving in a very similar kind of a manner. It's very difficult to try and find these stocks into a breakout mode. Yes, these stocks have been retesting the resistances time and again, but then the drawdown for these stocks from their resistance is almost 5% to 7% in many cases. So I think the best scenario for these stocks is to wait for a confirmation of a breakout or buy these stocks when they come back to their strong support territories.
Okay, in fact, I think we'll get Somit shortly to talk to us about the fundamental news for today on IGL as well as MGL for that matter, because UBS had upgraded the stock of IGL, plus they had raised the target price on Mahanagar Gas as well. So both of those stocks are in focus. If we can, let's take it across to Somit to get a better sense as to what, Varun is actually joining us to talk to us about what exactly is the story that UBS is building on the counters.
So UBS has actually raised the target on IGL and MGL, and actually they have upgraded IGL from a sell to a buy and raised the target from 400 to 700. For MGL they have a buy rating and the price target has been increased from 1600 to 2400. So this implies around 30 to 32% upside on both the stocks. There are two things that UBS is betting on. One is the volume growth and the next one is the M&A opportunities. Let me first talk about the volume growth. Now, UBS says that the infrastructure for the city gas distribution companies is expanding and these companies are entering into new geographies. That will aid the volume growth of these companies, and they are expecting from FY24 to 27, IGL volume growth will grow at 8.2% CAGR, and for MGL, the volume growth will grow at 10.2% CAGR from FY24 to FY27. Now coming to the M&A opportunities. So UBS says that the fundamentals of this sector are good, there is no doubt about it, but the inorganic growth prospects for this industry is very large. And currently, if you look, market is not factoring in the potential M&A opportunities available in the industry. And these are the two reasons for which they have raised the target on IGL and MGL and actually upgraded IGL from a sell call to a buy call.
Right, okay, and we were just highlighting and flagging off the big move on Bajaj Auto. They launched two new motorbikes today in the 400cc category with Triumph Speed. The ED Rakesh Sharma spoke with us exclusively and he says that they are building and expanding the modern classic category within this partnership. Listen in.
There may be a little cannibalization, but the larger story, as I was explaining to you, is about creating the blue ocean of modern classics. So it is about, if you see the penetration of this level of bikes in India compared to countries which have a very similar GDP per capita, is very, very low. And our demographic is a very youthful demographic. The purchasing power is improving. And I don't see any reason why the classic category, the modern classic category, doesn't expand. And therefore, we are looking at it more as expanding the category. And in that sweep, as we singularly drive this category up, we will obviously be the beneficiaries of better market share.
So one thing has happened generally we have seen in four-wheeler sector is slowdown coming. What about your segment? Because your segment is also on high base. Are there slowdown concerns coming there? Though sales looking to be quite better, but maybe after the festival season, are you preparing for some kind of slowdown coming in that segment?
Well, in the motorcycle space, we have been looking at something like an underlying growth of 5 to 8%, and this is largely driven by the recovery post-COVID finally reaching our type of customers. Our bulk of our customers earn 30 to 40,000 rupees per month. They are very different from the car people, and these people are now getting swept up on the underlying economic recovery. Now, this month itself is a little bit slow, which is understandable because there is a season right around the corner. This time October is packed with both the festivals. So there is natural to expect that the customer will postpone the purchase. So we'll see a soft September, but I think this October should be good. And I think over the financial year, we should see an underlying growth of 5 to 8%.
Back with closing trades, right here in ET now. We're holding out quite okay. Flat for the index though, but that's fine because I don't think a level of 25,450 would be any reason to complain. Having said that, it's really autos which are, at the fore today. Hero MotoCorp, Bajaj Auto, M&M, all looking smart. Other heavies like an L&T, Bharti as well participating in the move. Having said that, there's Eicher and Tata Motors as well, which are at the other end of the curve. And so is the case with ITC too. But Rahul Chadda on the show with us to talk about what he's making of the market right now. Rahul, hi, afternoon. Good to have you on the show. What is it that you're making of the market right now? I mean, all the valuation concerns aside, markets, and not just us, globally, they don't want to stop.
Yeah. No, I think what markets are looking is what Fed would do tomorrow. So September 18th is when Fed comes for a meet. And clearly, we're seeing globally economic data being soft. But the hope is that policymakers, particularly here, the central banks come quickly, act quickly, and cut rates quickly. So which is where 50 bips cut from Fed would be reassuring. And we've had some statements from the Fed members saying that Fed should go to neutral rates very quickly. So should that happen in the US, that would give room to the policymakers here in Asia, particularly RBI, to cut rates because there is growth slowdown. And I've been in India for the last couple of days, and there are visible signs of slowdown, whether it's real estate in India or consumption part of the economy.
Oh, so if you're in India, perhaps you should have joined us from the studios itself, Rahul, but good to be speaking with you in any case. But do you think if there is a 50 basis point cut, do you think that spells deeper worries? Because the slowdown that you're talking about, that would just raise the red flags. Or do you expecting that 50 basis point from Fed is the base case scenario right now?
Okay, so that 50 basis point cut, historically, markets have got worried on that cut because markets kind of think that Fed knows something which we don't know. There is a bigger issue, but we're not seeing that kind of a tightening, or we've not seen the stress in the credit markets. Historically, those kind of cuts happen when there is stress in the credit markets. And something which we've talked before, there has not been much excesses in the cycle in US, in India. What we've seen is China, where some of these excesses have happened, but the rest of the world, you've not seen much excess happen. What happened was Fed tightened too much, and that tightening was done because, look, your GDP grows, your inflation was running high, and you need to go back to a neutral rate of 3% very quickly. Else, with the real rates of 2.5%, the Fed risks taking US into a recession.
Interesting. So, Rahul, what's the call in India? Because our market as well, pretty unstoppable. And I don't think there's such a big question mark on the interest rate trajectory, at least here.
Yeah, no, I think India, what happens is clearly when does the growth recovery happen? So if you see last quarter, companies were blaming it on the summer. Hopefully, nobody blames it on the rains in the September results which come through. So it's really a question on how good the festival season is. And then in terms of the capex, one knows that capacity utilizations are running at 77, 78%. So when does the capex starts coming through? And then somewhere again, I think if the government policies remain like it's been committed to capex, fiscal deficit in check, markets would kind of shrug off the state elections, but they would have a little bit of an impact here and there in terms of if the ruling party doesn't win the state elections, that may just have some bit of a pure sentimental impact on markets.
Okay, but given the fact you're talking about slowdown in consumption, in real estate, etc., do you think it's time now to move towards the underperformers? Maybe book out your profits from real estate and auto, which did extremely well over the last couple of years, and move to the likes of financials, pharma, IT, for instance, perhaps, which were the underdogs?
So if you see last kind of a couple of months, we've been more on defensives rather than kind of the domestic cyclicals. And as we go closer to the rate cuts, one would move a bit from the defensives towards the cyclicals. But for somebody who's got a 3 month time horizon or a, kind of a short term time horizon, maybe some profit booking may be warranted. But if the hope is that you could see signs of recovery after the first or the second rate cuts, then these domestic cyclicals, which is the industrials, real estate, again become attractive. And look, typically we've seen these are about 7 to 10 years cycle. So we are in year 3, 4 of the cycle. So anybody who's got a time horizon more than 6 months, let's say about 12 months plus, um, uh, these names should be fine.
Having said that, Rahul, do you believe that the rotation that's happening in the market with IT, FMCG, pharma, along with now even banks beginning to participate in the rally, do you think that's sustainable?
Yeah, so I think what's happened is like what you guys were talking about. There's so much liquidity in the market, and that liquidity is kind of flowing in these sectors and move from economy sensitive to more defensive sectors, etc. Globally, as we talk to investors, there's still a lot of interest for India. So I think that is in a way, as people get more comfort on Fed's rate cutting cycle, people get more comfort on emerging markets improving growth trajectory, that money kind of flows to the EM funds and flows to India's, etc. So that's a positive. At the same time, we've seen a huge amount of fundraise also. So there is a sizable amount of fundraise which is lined up. If one is not mistaken, we may see some of divestment offerings coming from Government of India also, which is the best thing for them to do at this point of time to get the deficits down. So there is going to be a paper at the same time. But look, very few economies are growing at 10% nominal GDP plus, and that's where everybody wants to be part of the story. What one has to be careful is stay clear of the frothy segments, because historically, when we've seen that when you lose money, you can lose substantial amount of sums in the frothy parts of the market where you have weak businesses. You hear of so many IPOs where the business models are not proven, and the managements are shaky, and ridiculous amounts has been raised. So I think that's something any investors has to be careful of and stay away from.
What do you make of this over-exuberance that we are seeing? For instance, Bajaj Housing Finance just listed over 130% gain on listing. Today as well, it's higher by 10%. There are target prices of as much as 210 rupees a piece, valuing a housing finance company at 6.5 times book. In fact, that stock has hit the market capitalization of 1.5 lakh crore rupees, the first housing finance company to do that, and that's pretty much accumulation of the rest of the 5-6 companies which follow. And even Ola Electric, for that matter, it listed with that amount of momentum, cooled off a bit, and today of course there were a couple of initiations that happened on that as well. They are targeting upside of anywhere between 30 to 40% on that as well. What's your take on some of these kind of IPOs?
See, some of these things, look, it would be hard for us to buy something at 6 times a price to book, more so for a large kind of a banking or financial enterprise which doesn't have a good deposit mix, which doesn't have retail deposits, etc. So for us, it's phantom to build positions in this. And we've seen that markets can be irrational for a period of time. And when things correct, as we were discussing before, you can lose significant sums of money. So it's equally important to venture out to allocate where one has a good downside support, because the challenge with chasing momentum is that you become a victim of your own success. You start believing your own narrative, and then when things change, it is hard to come out of that mindset. So it would pay to be a bit disciplined here. That's the only thing I'll say here.
Right. Okay, Rahul, great speaking with you today. Thanks so much for taking the time out.
Thanks for having me.
Okay, let's take some closing trades as well. Kunal, what's the list like?
So that's L&T, and that's a chart which has started to look attractive. After 3 days of consistent price uptrend, the stock is nearing a breakout around the 3740, 3750 mark, and this could be a strong 200-pointer breakout for L&T, given the way the stock is consolidated for the last 1.5 odd month.
Okay, point taken. So L&T is one of the stocks to watch out for. Take a look at the Hero MotoCorp. That stock is up 3.5% right now. So Bajaj Auto is doing well and Hero MotoCorp as well. And in fact, just taking stock of some of the other big buzzers, M&M is the other one, which is also up 1%, while Tata Motors continue to be in red, and ditto is the case with Eicher Motors. So clearly, bipolar as far as the overall two-wheeler space or the entire auto space is concerned. A quick break and we'll be right back for the last 30 minutes of the trading session.
Back with closing trades, right here Nifty now still pretty quiet on the indexes, and a clear divergence between autos. You've got a Hero MotoCorp, Bajaj Auto all scaling up nicely. Eicher, Tata Motors are in the red. Let's welcome on board Vaishali Parekh as well as Sandeep Sabharwal. We already have Kunal Bothra in the studios and talk about what they're making of the market right now. Sandeep, hi, afternoon. Let's start with the Bajaj Housing Finance IPO, because that's where the FOMO feeling is setting in. The stock for a second consecutive day up in the green. But what is the message out there for people who want to participate right now? Should they be completely sitting on the sidelines waiting for the frenzy to settle down?
Yeah, Aisha, financial is a space where there are many companies, and there are many companies which do not have a different business model than Bajaj Housing Finance. So it's not a unique space. Like, it's not like some new technology company or some different businesses come and listed there which you cannot value. So this company can be easily valued. The price at which it's trading is crazy, and there's no way you can justify these valuations when large, established, diversified financials are trading at half, 1/3, or maybe 25% of the valuation of this company. So I think, like with many other IPOs, this is just fancy trading in a stock which has limited floating stock.
Bit of a frenzy on this one, and is it a frenzy on Ola Electric as well? And now it's the brokerage houses which are joining the bandwagon, because today Bank of America as well as Goldman Sachs initiated coverage. They have a target price suggesting an up move of almost 30 to 40%. The stock after listing, Sandeep, had run up quite drastically, but from there was a bit of consolidation that happened. Now, do you think it's ripe already for the next leg of growth? What's the view on Ola Electric?
Yeah, I read through some of these notes. The ridiculous logics have been given. A company which is losing market share on a monthly basis, they are giving forecasts based on than either maintaining or improving market share, which is not going to happen. So the legacy players in the electric vehicle side have become much more aggressive in terms of model launches, in terms of what they are trying to do. And I think they will be the bigger players in this market going forward. Ola Electric will continue to lose market share. And if the incentives also keep on reducing, then their losses also will not reduce. So I'm not sure what logic they are looking for.
Not sure of the logic, but just to extend that point further, Sandeep, because we're going through the YTD data as to how the sales have really stacked up, and it seems like EV hasn't really picked up, at least in terms of absolute number. It's still the hybrid models that are getting, more traction, or the CNG versions. Do you think, given this kind of construct, the likes of Maruti, etc., which were slow to begin with in the EV transition and were banking more on hybrid, they stand to gain better versus, let's say, M&M, for instance?
No, see, the four-wheeler passenger vehicle side, I think it's having a phase of consolidation where after a period of slightly good demand, the demand has moderated. So I think the demand is moderating across the board. Now we need to see whether the festival season leads to some revival, or whenever the monetary policy starts easing, we see some revival in growth, etc. So I don't think it's that way. But on the EV point, if you look at what's happening in Europe, if you look at what's happening in the US, the EV adoption has suddenly started falling off the cliff, or becoming standstill, as incrementally people don't see too much value in that transition at this stage. So especially where oil prices are free to move. And in the US, I think gas prices are at multi-year lows. I think that's the scenario today. And in India, also the market share increases are happening more because of incentives rather than conviction in the minds of buyers that this is what they need to do. So EV adoption has to grow, it will grow, but not at the pace at which what people are expecting.
Let me also welcome on board Vaishali Parekh. Vaishali, wanted to understand what do you think is trade-worthy within autos right now? Because quite a bit of divergence, like we've been discussing.
Maruti, and I still do like Samvartan, because two-wheelers already have seen a good run-up, but I would say in the four-wheelers it should be Maruti at this level, because it has been into a long consolidation phase. So once we see the stock about 12,400, 12,500, this could go towards 13,000, 13,200. So I guess risk-reward wise also this is a favorable pick. And I would look at Motherson, as I said, that is still showing a lot of strength. It's an auto ancillary, so but I think that would go towards a target of 210 or so.
Okay, that's the take coming in right now on what Vaishali is picking up from within the auto pack, or ancillaries rather. But Sandeep, you've been an investor in Interglobe Aviation. Now with SpiceJet getting into fundraising, etc., with that intended 3,000 crore rupee QIP, wanted to understand if you would diversify into SpiceJet too.
As a contrarian investor, I would like to, but then the risk in airlines is so much that it's not a question of slowdown and anything, because if they are unsuccessful, they run the risk of a shutdown. And that is the problem. So I think until and unless they do the fundraising, I would not like to venture into the stock at this point of time.
At venturing into SpiceJet as yet, but Vaishali, wanted your take regarding some of the big buzzers. Look at the up move on Prestige Estate in the last 2 minutes. We were just discussing the real estate pack with Kunal as well. But what within real estate would you pick? And the other stock which is coming up on my radar is Jio Financial Services. A bit of a perk up in the last few minutes, Vaishali.
So I would say yes, the cash category, the real estate are doing much better than the frontline DLF and this. So I would choose Sobha because Prestige has already got into momentum. Having said that, there still is a lot of upside, but I would choose Shobha now because still I think the volume is picking up and the momentum has just begun. So I would say I would give a buy recommendation on Shobha because after a very long consolidation, it's trying to come out of it and the current price is 1851. So support of 1800, this stock can go towards 2000 also. So Shobha looks quite appealing to me. And for a quick FNO trade, it could be just DLF. Because that also is quite holding on quite well. So with 850 as stop loss, 880 as a trading target.
Okay, not just Bajaj Housing, but looking on Ola Electric, that's up over 7% as we speak right now. So really on a tear. There's Torrent Power as well. That's holding up quite smartly too. It's off from the day's highs, but it began the day pretty well. They at the RE Invest 2024 conference, they announced a commitment of about almost 64,000 crore rupees with a potential employment of 26,000 people as well. SpiceJet, of course, is something that we already addressed. So a couple of these stocks definitely are in focus. But the interesting one is CLSA and their note on financials, talking about HDFC Bank as to how, they're now looking at this one. They're saying many investors remain unexcited about HDFC Bank after the slow start to the year on the deposit accretion. And among the private sector banks, they're saying IndusInd Bank received some interest from investors. They believe that most investors are now awaiting the RBI decision on the MD continuity as well as the tenure now. Investors are incrementally more comfortable on a Bajaj Finance, which they also are quite positive on. Sandeep, you have liked an Axis and ICICI Bank, but would you now stretch beyond that list? Kotak, HDFC Bank perhaps?
The Kotak we bought as a contrarian bet, but it's not participated yet. So it's almost 3-4% up from where we actually bought into the stock. The reason I bought into that was that the valuations are now in line with most of the other large cap banks. Their NIMs are higher, and they have this uncertainty related to the.
We seem to have snapped that line. Just going to get back to Sandeep in just a second and get in his thoughts on Kotak, or for that matter, even HDFC Bank. But Kunal, what do you now see on the charts for the Nifty Bank? Because you're not really seeing continual strength.
No, I think the strength is there, but it's a bit more staggered. Yes, it's not, the momentum is not there. And I believe that part of it is because of the way many of these large cap, private sector banking stocks have been very slow in terms of their trajectory. The only stronger stock which we can point out from the private sector large cap name is ICICI Bank, the stock which has done exceptionally well in the last 2-3 weeks. And I think that's more or less like a leader in terms of the price performance so far, because many of the other stocks, the likes of Kotak, HDFC Bank, etc., these stocks are just trying to chug along, still way off from their lifetime high levels. But I believe that with strength emerging from one major stock from the private sector banking name, it should eventually trickle to the other pack as well. So my sense is that the Bank Nifty eventually would get back into a very strong surge of momentum. I think it's now time of maybe short-term patience over here for traders and investors. And anyone who's holding on to long positions on the Bank Nifty, even on the future side, I think it's 51,000 to 5,500 as a closing support. I think it's a very good strategy to hold on to the long positions over here, and in fact even try to build further long positions for large cap names like ICICI Bank as well.
Okay, point taken. So that's the mood of the Bank Nifty and its constituents right now. But time to take some BTSC trades now. Vaishali, what's on your buy today, sell tomorrow list, or is it STBT on something?
No, I would go with Kunal. Actually, ICICI is very much on my radar, and I think I'm looking for a target of 1280. So with a stop loss of 1250, ICICI is my BTST.
Kunal, what about your BTST apart from ICICI Bank?
So I'll go with NTPC. That's a chart which is looking attractive. In fact, the stock is at the verge of a flag pattern breakout about the 417 mark. So expecting the stock to provide the breakout in the next couple of days. Buy with a target of 434, stop loss at 405. And second would be a ban Aditya Birla Sun Life AMC. That's a chart which is also completing a swing breakout about the 758 mark. So buy with a target of 800, stop loss at 730.
Okay, bunch of stock ideas coming in over there, both BTST trades coming in from our experts. But let's also talk about the FTSE rejig, and they've announced the semi-annual review of the index changes. The adjustment, of course, is going to be effective from September 20th and can lead to inflows of about $1 billion. What are the stocks that are added and removed? Sumit is here with that list.
Well, the flows related to the FTSE September 2024 semi-annual review changes are expected to happen on September 28th. The flows are expected to come in the last half an hour of trade, and these changes are comprising to the FTSE All World Index, and this rebalancing could lead to an inflow of close to $1 billion as per analyst estimates. Now, as per IFL, GET&D, Endurance Tech, KEI Industries, Hitachi Energy, Lloyd Metal could see an inflow of anywhere between 17 to 53 million US dollars, which is nearly 2.125 times that 20-day average volume. Apart from that, it's IRB Infra, Motilal Oswal, Central Bank of India, Bank of Maharashtra, Bharat Dynamics, Hudco and Cochin Shipyard, which could see an inflow of anywhere between 7 to 37 million US dollars. Apart from that, it's ICICI Bank, Kotak Mahindra Bank, AB Capital and Tata Tech, which would see inflows on the back of increase in their weightage. And among these four names, the two which are expected to see the highest inflow are ICICI Bank and Kotak Mahindra Bank. ICICI Bank is expected to see an inflow of close to 236 million US dollars, while Kotak Mahindra Bank is expected to see an inflow of close to 105 million US dollars. And lastly, Mahindra and Mahindra could see some outflows on the back of lower weightage in the FTSE index, and that outflow could be around 65 million US dollars as per IFL Alternative Research.
Okay, that's the take coming in on the FTSE rejig. I don't know if Sandeep Sabharwal is connected back with us. Okay, no, he will take some time. Just looking at some of the other movers, we've been discussing MGL, IGL, Hero MotoCorp and the strength on those stocks. But look at a Biocon today, that's down about almost 4%. Syngene as well, down 3% as we speak. In fact, I want to just bring up the constituents of the pharma index because they are definitely not having the best day today, other than Lupin, Cipla, which are only marginal outperformers. You've also got an Alchem, Lalpath Labs, Glenmark, Granules. It's all a sea of red as we speak right now. Kunal, your thoughts on pharma and anything if it's looking interesting?
I think larger cap names are the ones which are looking attractive. Lupin, Cipla, I think these stocks have confirmed breakouts. Even at current levels, the momentum is still intact into these stocks, and I think that's the the best part about riding these stocks in terms of a rally. There was a minor correction, I think, for the likes of Cipla just about a week back, 3%, 3.5% correction. But then the stock has digested that and moved up hard to make a fresh swing high, breaking about the 1650, 1670 mark today. And same is the case with the likes of Lupin, Sun Pharma. These are the charts which are looking much more strong at current levels. And when the sector gets into such a strong set of momentum, it's always prudent enough to try and have more weightage in terms of the leaders or the ones which are larger cap performers in the sector. So I think in that aspect, Cipla, Lupin as well as Sun Pharma are the ones which look attractive.
Okay, but what about Biocon? You missed that out, or you just deliberately not talking about the kind of decline that we're seeing on that one?
No, because that stock is very erratic. I've tracked the stock for quite a long time, and I think 390, 395 apparently in the last 2 weeks or so has been a major resistance. Yes, the stock has fallen down today on much higher volumes than what we've seen in the last 3-4 days. I think it's almost 92 lakhs of volumes in the cash segment for Biocon on the daily charts today, as compared to 80-85 in the last couple of days. So the selling is on the higher side, but then again in the last 3-4 days we've seen 390-395 acting as a major resistance for the stock. So it's a better strategy for Biocon is to try and buy the stock when it comes back to the support point. Currently, the support is around 360, 365 mark. So I'll wait for at least another 3% to 3.5% correction before going for a contra buy over here.
Vaishali, let's check in on the two big movers from yesterday. That was both BSE as well as MCX.
So yes, BSE, in fact, we were looking for a target of 3,500 and that's what we have seen. So to those who are still wanting to hold for a longer period of time, well, we have the next projected target of 4,000, 4,100. But for near term, I would suggest to book partial profit. And as far as MCX is concerned, well, we saw good momentum coming in today also. And I think there is still scope for further upside, but not a new buy strategy at this level. Well, as far as the indicators are showing, it is a regained momentum. So to those who are holding, should hold with a trailing stop loss.
Right. Okay, that's on MCX as well as BSE, the big buzzers from yesterday. Also looking at what the technology names are up to. While TCS Sure is mildly in the red, so is HCL Technologies, Coforce flat, Infeed flat, LTIM in the green though. So is the case with the Persistent as well as Emphasis. Vaishali, what about the IT index? And if you could just highlight what's looking like the stronger charts as opposed to the weaker ones?
So I would say yes, IT index has already shown a good run up, but it continues to show strength. So to my liking is HCL Tech because it has gradually shown a good upward move, and I think it's still ready for further upside. And I would say even for a long-term perspective, 1700 would act as a good support, and look for a target of 2000 to 2100.
So that's the bet coming in as far as the IT pack is concerned. But in terms of the few movers that are perking up in the last few minutes, Craftsman Automation is something that is definitely showing quite a bit of traction. We also have Kaplan Point in focus, so we are seeing a bit of a momentum on some of these names, and Blue Star and Prestige Estate were the ones which we were talking about earlier as well, and they are building onto momentum as we speak. Blue Star is coming off the lows as of now. In fact, talking about the losing side as well, there is Triveni Turbine, which is down 6%, Godfrey Phillips is down 6%, so a bit of a profit booking there. And apart from Biocon, you also have HAL and BSC, which are down in the trading session, and ditto can be said for JSW Energy and Suzlon Energy. In fact, energy as a basket is down today, so JSW, Suzlon, REC, they're all under pressure right now. Vaishali, your take on some of the power names right now? Would you be a buyer in any name? Is there a chart that looks the strongest?
No, in fact, I think one can get ready for a sell strategy because talking about REC, we have been closely tracking it. So if we see a close below 540, that could trigger a further weakness going towards 500 levels. So I'm not so positive on overall these power stocks.
Okay, and in fact, talking about the power sector, my colleague did manage to catch up with the management of IREDA. Let's hear out what they had to say about the stake dilution particularly.
We will be going for fresh issue because we require fresh capital for our net worth addition because we have to maintain a healthy CRAR. So post our IPO, our CRAR was 25%, it has come down to 20%. And the kind of disbursement plan what we have, our CRAR will further go down. So any ratio of below 18% is not a healthy signal. So we have to periodically pump in equity. So we have decided to infuse equity to the tune of 4,500 crore to 5,000 crore this year end. For that, whatever natural dilution will happen, that will happen for Government of India. Government of India is not going to sell anything. Automatic percentage dilution will happen. We have sought 10%, up to 10%. We are waiting, maybe in a couple of days we will be getting the approval.
Okay, that's the management of IREDA. In the meantime, some consolidation may be brewing in India's wealth management industry. That is what we learned from our sources, that the Swiss banking giant UBS is exploring options for a strategic partnership for its wealth management business in the country. And it is in talks with none other than 360 ONE. Anurag Joshi, my colleague, joins in with exclusive details.
Swiss banking giant UBS is seeking partnership options in India. It is looking for strategic partnership in India. And sources have told ET Now that UBS has had an exploratory discussion with Indian wealth management firm 360 ONE for a possible and potential equity purchase. And this proposal to purchase a stake is still at a very early stage, and after the discussion there is no progress on the matter. Now UBS left India about a decade back in 2014 when it had surrendered its banking license, and just last year it made the first steps of an entry back into India when at a global level UBS had acquired Credit Suisse. Just last month the RBI added UBS into the second schedule, and this to allow it to operate as a commercial bank in India. Now, if we look at 360 ONE, it has 7,400 high net worth and ultra high net worth clients, and it's got asset under management of over 5,20,000 crore rupees, and it has 28 offices both in India and overseas. And just in July, Nirmal Jain had left, had retired from 360 ONE as a director.
Okay, thanks Anurag for that. We'll keep tracking all of that happens. But On the gaining side, however, there are stocks like Blue Dart, Century Ply, Himadri, Canes. These are the ones which are actually perking up. You also have Thermax, Sobha, which is actually doing quite well. Nuvoco Vistas, that stock too is up 4% in the trading session. On the losing side, however, Godfrey Phillips, Triveni Turbine, Apar, BLS, Biocon, these are the names which are coming under pressure. But within financials as well, just tracking as to what's really making a big move, because of course Bajaj Housing Finance is doing quite well and it's topped the market capitalization of almost 1.5 lakh crore. But come tomorrow, or actually day after for us, we will be reacting to that big news flow of the US Fed decision. 25 basis point or 50 basis point, that's the big question. And on an everyday basis, that probability is skewing to a large extent. If you were looking at the data 1 month ago, there was a clear majority that it's going to be a 25 basis point hike. Yesterday when I checked the probability, it was 50:50. Today morning, it's tilted in favor of 50 basis point, and there's 67% of the participants who are expecting a rate cut of 50 basis point and only 33%. And all of that data will come up for you on the screen shortly at some point of time to discuss as to what the breakup is in terms of the expectations as well. But overall, the expectation is that there is going to be a rate cut and the initiation of that cycle after 4 years, because the last time we had seen was, of course, during the COVID time. But as we wrap up the trading session, a quick word from you, Kunal. As far as the market mood is concerned, we did try to hit that all-time high level multiple times today, but failed each and every time. What does it tell you about the market?
No, that's okay, because I think we're still trading about the 25,400 mark. So, give or take 40-50 points, would not probably impact the near-term trend for the indices, unless I think there is a negative price action which comes back from the global front. So I think what we are seeing right now is a much more state of calm across the globe, and that's, I think, adding to stable market cues over the very near term.
To highlight, in fact, Europe is actually doing quite okay. There too, the central bank decisions in focus. You've got the DAX, which is higher by over 100 points, and it's almost a 1% move for the FTSE, 7/10 for the CAC, FTSE MIB, 270 points higher, no less. So not looking bad at all. The US futures as well are doing quite okay, especially led by the NASDAQ, which is up over 100 points right now, and a smidge in the green for both the Dow as well as the S&P, but green nonetheless. So they're all bracing for the retail sales data and, of course, the big one, the Fed policy meeting. For our markets, pretty tempered, pretty quiet. MGL, IGL, Hero MotoCorp, Bajaj Auto, Birlasoft, these were all names which were the outperformers today. Bharti managed to eke out a fresh high for itself. There's ICICI Bank, which did pretty well, Kotak, M&M, Britannia, L&T, they were all buzzers in trade, but got dragged down on the other end by Tata Motors, Dani Ports, Tata Steel, Eicher, as well as ITC, along with, of course, Biocon, HAL, REC, Syngene, Piramal Enterprises, which were all the underperformers in trade. So closing in absolutely flat for the day, but hopefully there are signs of better global cues that we're going to wake up to. So we'll pick it up tomorrow morning. Thanks so much for watching.